Welcome back to our non-stop coverage on market today. As far as the interim budget is concerned, with me is Managing Editor Siddharth Zarabi. Siddharth, what were your first takeaways from this 58-minute speech from Finance Minister Nirmala Sitharaman?
Well, very clearly one of the shortest speeches that we have seen in recent memory and amongst the shortest by Finance Minister Nirmala Sitharaman. But the big 2-3 key takeaways, and Shail, the market response is already playing out sectorally at the indice level as well. But the key takeaway from a middle class point of view, no changes in tax rates, no changes in direct tax. Obviously, indirect tax is a matter of GST. And that one small change that we had seen for import duties happened outside the budget. I must point out here that customs duties apart from taxation, if there are some changes, we'll have to wait for the fine print. But that one big headline at this stage, it is 2024. There is no repeat of 2019 where some tweaks were made. The second major headline, no major massive new scheme announced. I must say this, that in terms of allocations for various existing schemes, again the fine print is awaited. But within that, two major announcements that bear repetition. One, a new scheme for middle class housing. Remember, affordable housing has sort of gone under the radar and we are seeing premium, super expensive houses being sold. There is a gap in the real estate market, the government perhaps stepping in on that front. This will obviously mean good news for a lot of input stocks for the housing sector. We can discuss that later. The second bit is the solarization rooftop solar program. 300 units of free electricity for a certain set of beneficiaries. More importantly, excess capacity from rooftop solar to be possible to be sold into the electricity grid. So two things stand out. There's a bunch of other announcements or tweaks when it comes to the overall women portfolio. The third major, and this perhaps is the biggest headline, one, borrowing lower than projected. Second, as far as the capex program is concerned, at 11.1 lakh crore, lower than expected. Bonds are obviously reacting to this bit. And the third one and final point, Shail, is the fiscal deficit glide path. The fiscal deficit for the current year being projected at lower than expectations, for the next year a significant dip, and beyond that. So clearly FY24, 25 and 26, a 3-year fiscal deficit roadmap also being put out. A pleasant surprise. Obviously some of these numbers may get updated in the final budget or the full budget in July. But the big picture right now, as Prime Minister Narendra Modi had told us to expect guidance and direction, and he had very clearly said wait for the full budget. That entire remark being made visibly clear in the almost 1-hour speech made by the Finance Minister. But very clearly fiscal consolidation, no major Paul Eve sops, and I think we should give marks to the government for that. There is no need in some ways because of the good tailwinds that exist politically for the government. But the government has stayed the course, and by staying the course and also making a conservative projection on capex, it's clear the government recognizes that execution will be key between now and July. Shail.
Yes, absolutely, Siddharth. Very well systemized as far as the 58-minute speech was concerned. I'll just mark a couple of stocks in the regions that you pointed out, and specifically in the housing space. Let's look at HUDCO. Siddharth, this one's hit a record high. This is, of course, the financing, the government financing arm of the housing sector. You put it very rightly. Middle class housing will be in focus, as also 2 crore more houses will be set up in the next 3 years under the PM Awas Yojana. As you've already seen, about 3 crore houses have been built. HUDCO in front of you is at a record high, and Siddharth, this comes on double the 5-day average volume of about 8 odd crore rupees. Apart from this, you've seen a lot of action happening on the vaccination side. Therefore, Pfizer is ticking very strongly. You see it about 3 odd %. And within the industry, a new setup coming in the fisheries sector. The government plans to set up about 5 integrated aqua plants as far as the business is concerned, and therefore Avanti Feeds is up about 5.5%, 6% at 544. Exports are to be in the range of about 1 lakh crores as far as seafood exports are concerned, and of course Siddharth, the EV ecosystem. You need to expand, strengthen, and sort of support the charging infrastructure and new e-buses. Therefore, two or three stocks are doing well. That is Electra Buses and JBM Auto. This is what I could find out in terms of individual sectors and individual stocks. HUDCO, Pfizer, Avanti Feeds, JBM Auto, and Electra. Siddharth.
And the rupee also reacting positively to the borrowing news, to the fiscal glide path, and a bunch of other smaller inputs together. Shail, as I leave you, I would just quickly want to point out this budget presentation marks a very confident government going into the elections. Remember 2019, there was a bit of skittishness, there was a bit of nervousness. But this time round, it's very clear that the government is completely gung-ho as far as the politics of the upcoming political season is concerned, and that translating into a conservative, careful, credible set of numbers, and clearly at the index level, the markets taking note of that. Shail, back to you.
Yes, Siddharth. We'll just point out one anomaly here. You might just see the Nifty flat to sideways. That's mainly because it's the weekly expiry for the index today. But the overall structure of the market, Siddharth, is fairly good. We have Gauri Chadha joining us, who's a tax expert as far as internal laws are concerned, and of course Sudeep Bandyopadhyay also joining us to give his expert comments as far as this interim budget document is concerned. Sudeep, to you first. What are the one or two major things that you like in this speech that lasted for about 58 minutes?
Shailji, the biggest positive I would say is that they have continued the momentum on the capital expenditure side.
Yes.
11.1%, on top of what they have done in the current fiscal, I think is an excellent announcement as things stand today. The second thing I will say that, what Siddharth was alluding to is that in spite of the election being around the corner, there has been no visible, political kind of soft or maneuvering. This is a pure focus on finance and consolidation. So the deficit number, which they are talking about, 5.1%, sticks to the fiscal consolidation path. The net borrowing, which they have put forward, also is kind of very fiscally prudent, and that's why the bond markets are cheering. Overall, I would say it's a very balanced vote on account. It's a typical vote on account. No taxes have been touched, and probably the market is bit disappointed unjustifiedly. But as we know, expectations keep building up whenever there's a budget announcement. So I think they will get over it. I think it's a very good announcement, very good budget, interim budget on that, I would say. Focus has also been given on certain areas which needed focus, like rural housing. 2 crore houses being built will provide impetus and incentive. Rooftop solar, I think, has been talked about, and I think that's another area which there is enormous potential. I would also point out this development on the fisheries aqua park, which they're talking about. I think these are all small but necessary steps which will augur well in the near future. So I think it's on the balance, it's a very good document, very good announcement for the time being. I'm sure they will take up multiple other issues in the full budget in June, July.
Okay, let's just get the tax angle in as well. Gauri Chadha joins us. A very good afternoon to you, Gauri. One thing that the Finance Minister Nirmala Sitharaman alluded to was the ease of living as far as taxpayers were concerned. She thanked them profusely in terms of the numbers that have risen and as also the tax receipts. One good thing is that, non-verified tax disputes going back to 1962 have been cut down to the extent of about 25,000 rupees and 10,000 rupees. How do you see this as a statement of intent by the government to sort of reward honest taxpayers?
See, first of all, I think being an interim budget, I think it was a perfect budget for the part B, because we were not expecting any major cut in the tax slab or anything, which of course didn't happen. And that doesn't mean that there is no change required in the taxation, but definitely it was not required in this interim budget. In final budget, of course, we have much hopes. Now, if we talk about the disputed amount of 25,000 and 10,000, I think it's a very good step, but the amount I feel is too less, because 25,000 and 10,000 disputed amount, I mean, waiving of such a small amount, I don't think so is a very big thing. Secondly, I feel that instead of waiving of this amount, they could have introduced or bring back the amnesty scheme in GST and in income tax, because there are so many cases, and even in MCA, basically, for companies and LLPs, where basically the companies, private limited companies, LLPs, income tax, GST, there are so many people who are fighting cases, and the company is they are trying to liquidate their company or LLP, and it is stuck somewhere, or maybe they have not filed any form for last 2-3 years, and there is huge penalty piled up on that. So I think bringing amnesty scheme for these few things was would have been a better step. But although I think the disputed waiving of the disputed amount itself is also a good step, but of course I feel that in final budget this amount should be raised, or maybe next year they should consider something more than this.
Okay, I think the intent was to sort of keep 1 crore taxpayers who've been, let us use the word, troubled over the last so many years on amounts which are, less than worthwhile, both from the point of view of government time spent and, of course, the kind of problems that people face while going to advisors. Of course, point taken, Gauri, and I'm sure the Finance Minister will also take your suggestion in mind. The markets, Sakshi, are coming back to life. The Nifty is now firmly in the green, 24 points higher, 21,751. Bank Nifty, it's the banks that are roaring on the public sector space. High seen on Bank of India, 143.35. High seen on Punjab and Sind Bank, 52.20. Of course, PNB is roaring at about 116, and Bank of Baroda at about 247, 248. Over to you, Sakshi.
Okay, I think we have more guests lining up to give us their first comments as far as the budget presentation is concerned. We're now joined by Gokul Chaudhary, tax leader, Deloitte India. Gokul, very good afternoon. Tell us your first take as far as the budget commentary is concerned, and of course, no announcements on the tax front. Is that disappointing?
Well, the expectations were that the finance minister will stay the course, given that it's a vote on account, it's an interim budget. But I think there are a few things that the government has stated which is very helpful. One, that we have entered a phase of a very stable, predictable tax regime. And that is something that the finance minister intends to continue into the next year, including making sure that some of the clauses which had a sunset clause, such as on sovereign wealth funds, etc., though they will be sort of extended on to the next year. So I think having a stable, predictable tax regime is a very important messaging that the government has done. The second thing the government has clearly brought out is that the tax reforms of yesteryears, all the reforms that they did, whether it's on the GST side or whether it is on the corporate tax side, those are yielding results because we are seeing the buoyancy in tax collection coming through. So there's a strong tax flow which has happened. So I think that's the second important piece. The third is that the government recognizes the situation and has tried to work within that situation to try and make sure that they can do a few things. A few things such as they try to make sure that the old disputed amounts continue to get off the books and no longer clutter the system. So, if you look at the number of tax disputes that have been sitting from yesteryears, there were nearly 4 lakh of them. So, if this takes away a large volume of them, but less value impacted on the thing, I think the government's books will look far cleaner, far simpler. So, I think these are all very positive signs. I think the taxpayer community may look a little disappointing, thinking that they may get some sops, but I think the finance minister will be very clear. They want to make sure they actually demonstrate the confidence and stability in the tax system rather than do any incentives at this moment.
Right. And perhaps that is the thinking that the finance ministry deployed, that to provide ease of transactions between taxpayers and the tax department, look away on all those niggling points which offer very little return in terms of whatever pecuniary tax you would collect, but take away the deadwood, take away the pain in all those 4 lakh transactions. Getting in Mr. Bandyopadhyay back into the conversation. Sir, look at how the railway space has benefited. The government has mentioned 3 major corridors which it will look at. The energy, mineral and cement, looking at port connectivity as also as passenger corridors. How do you see this overall increase in the outlay by 11.1% to 11 crore, 11 lakhs, 11,000 rupees?
I think it's very, very important, Shailji. Look, these 3 are the major areas which use railway as mode of transport. Minerals, cement, these are heavy materials and they require reasonable, effective and efficient transport through railways, and that's where the focus is. Port, of course, goes without saying. I think it's very, very critical that ports are well connected through railways. And of course, heavy passenger areas for ensuring an accident-free, smooth, speedy movement of passengers. So the focus is on the right place. Also, converting 40,000 wagons into Vande Bharat standards is a welcome development which will benefit the companies which are in that sector. Overall, I think this government's focus on railways is amazing. Never ever has railway been in so much of focus with well-rounded development. It's not only the wagons, not only the the railway electrification, not only the station development. Every single aspect of railway are being looked at and developed or improved. So I think this capital expenditure, at least a part of it, will go towards that.
Mr. Bandyopadhyay, I also wanted to understand as far as the auto space, especially the EV space is also concerned. We've seen that the government has mentioned, and Finance Minister did say in her speech as well, that the government will support EV manufacturing, charging infrastructure. They will expand and strengthen the ecosystem by supporting the manufacturing and charging infrastructure. She also said they are going to be promoting green growth. One new scheme for biomanufacturing will also be launched. How do you see this in the whole EV manufacturing scheme, and which are the stocks that you will be bullish on now?
Sakshi, this is what I mentioned when I first mentioned to Shailji. I think government has tried to focus on the right areas. It's an interim budget. They can't do much, but whatever little bit they could do, they have done in the right areas. Yes, electric mobility is one of them, and charging infrastructure is a crying need. Without the charging infrastructure, I think having vehicles will be meaningless. So focus on charging infrastructure by the government at this juncture is extremely critical and timely. So of course, the beneficiaries will be companies like Electra, JBM, and to an extent probably Tata Motors as well. So we should keep these stocks in mind. And also there are multiple companies which are working on the charging infrastructure. So we should take cognizance of that as well. They may not be in the limelight so much at this stage, but going forward, there may be a lot of companies emerging who will have a major charging infrastructure provider. So we'll have to keep an eye out for all this. And this is an excellent step. So as I was mentioning, Sakshi, solar rooftop is a great area to focus on. Electric mobility, particularly the charging infrastructure, is again a great area to focus on. The railways are picking up these 3 big chunk, which is power, which is the minerals, cement, and on the other side, the ports and that heavy passenger. So it's a great idea. Rural housing, again, a fantastic area that has been neglected. High-end houses are selling, but rural housing needs to be focused on. So I think they have tried to focus on the pockets where focus is required under the constraints of an interim budget.
Absolutely. I think that's well put, the last line, as Sudeepji mentioned, that given the goalposts, the thin goalposts that you had, the vote on account brings with itself, the government has done a fantastic job when it comes to sort of seeding market sentiment. I'd like to get Gokul's view in as far as the indirect taxation has views coming in from the Finance Minister Nirmala Sitharaman. She talks about the doubling of tax base as far as GST collections are concerned, and the fact that corporate India seems to be very happy with how the tax has been implemented over the past 2-3 years. Gokul, what are the one or two changes that you would hope to expect in the forthcoming document in July as far as GST, ease of GST is concerned?
So you're right. One of the things that the finance minister spoke about was, of course, the greater acceptance of GST as a form of taxation in corporate India, as well as in the business communities. I think this is a huge transformational effort that the government took place in the last few years, and it's showing results financially also because we are having a very robust tax collection and it's giving a very predictable pattern to the growth which is there. I think a couple of things which we spoke about with the people who form policies over the last several months has been that maybe this is a time when we have to do a couple of things. One, we have to look at the amount of tax credits that are getting stranded specifically for the MSME sector and try to reduce the amount of cash traps that are being created in the GST flows so that there's a greater efficiency and agility that is being experienced by the MSME sector. So that is one piece on the GST side, which I think the finance ministry is cognizant of and is likely to resolve. The second aspect is that the entire GST is based on the GSTN network. And I think it's a profound technology that has gone into the building of the backbone for GST collection. So, really the efficiency and productivity is coming because it's a technology-based play. The next generation of reforms ought to be somewhere around the area of data analytics to make sure that we can understand what is happening in each of the sectors which the government wants to address. What's the flows like? What's the type of activities that the government needs to do to immigrate to create greater efficiencies in those areas. So I think the two things that will happen on GST is, of course, the emphasis on data analytics around the GSTN, and the second is the liquidity traps that are sitting with
Certainly, I'll
MSMEs.
introduce Amisha.
Okay, we have Amisha Vora now joining us, Chairperson and MD Prabhudas Leeladhar Group. Good afternoon, Amisha. Good to have you with us. Tell us your first take on the interim budget. The markets are flat. There is nothing that the markets have really got enthused about. But what is your own take?
So market being flat is just one side, maybe impacted a bit because of the prior rally, also because of the US overnight market response. But if you ask me, budget is really very good. And mostly because before the rate cut also, we get this kind of net borrowing being in control. We get this kind of fiscal deficit number. Both are so encouraging that the private sector will not be crowded out by government borrowing. Bond yields, I think, can start cooling off and in turn provide that virtuous circle of further growth. Apart from that, there is one more highlight which I don't think should be taken negative, that for last consistently 3 years, we were seeing very huge rise in capex from the budget, which is 30% around. Now this year it is about 11%. But I think it has more to do with two things. One is it is on a larger base. And second is that the private sector capex is also started to roll out. Apart from that, the larger term focus on infrastructure is, as always, very good. So I think it's whole in all, a very good budget.
I think that's a very, very valid point that Amisha ji makes, Sakshi. And one of the very less reported and how should I say, less understood stories has been the strength of the Indian balance sheet that has come up over the last 3.5 years. Tax receipts have been very buoyant, and as Amisha rightly points out, the borrowings of the government are actually less forecasted than what is there in 23-24. So at a gross level, 14.13 lakhs, and at a net level, 11.75 lakh crore, which will be less than what they are in this financial year that ends in March 2024. So that's a very big plus. The private investment is not getting crowded out, and it also means that the glide path to fiscal consolidation, to a fiscal, how should I say, reduction in terms of the deficit is also on the cards. Gokul, would you want to comment on how the fiscal balance sheet of the country has improved over the last 3 years.
No, I think this is very, very encouraging when the finance minister said that we are well within the fiscal deficit range of 5.9, which they set, and now they're going to do it at 5.8. And then, of course, setting out the fact that, the roadmap for 4.5. I think these are very, very encouraging signs. I think the other connected piece out here is going to be the confidence that possibly the new government will have to try and move to the next generation of reforms, which will include expanding, for example, the GST network to include petroleum products, to include ATF, to include natural gas. Now, if we are able to do that, then we bring a larger part of the economy into a unified tax regime. And the minute we do that, we get greater efficiencies and productivities in the economy because your credit chain becomes a lot more efficient. So I think one of the takeaways is the fact that the success of GST and the success in the economy to absorb the GST is going to lead to the possibly the next generation of reforms in GST, which includes getting more sectors into the GST.
Okay, let me get Gauri into the conversation right here. Gauri, some more flashes now coming in from the budget document. So FY24 income tax mop-up has been revised to 10.2 trillion rupees. FY25 income tax mop-up has been pegged at 11.5 trillion rupees. So that's as far as the income tax part is concerned. We also have the GST details now. FY24 GST mop-up unchanged, and versus the aim of 9.5 trillion rupees. And I will just try and see if we do have the FY25 number also now coming in as far as GST is concerned. But given the kind of expectations they have on the income tax front, is it on cards or is it slightly underestimate?
See, if we talk about the personal income tax, I believe the tax slabs are way too much, and the highest tax slab goes to 30%. If you compare the same with the corporate tax, the tax has been reduced, and as the finance minister also said today that the corporate tax is now at 22%. So if you analyze the data, when they reduced the corporate tax to 22%, the government revenue from the corporate tax actually increased. So I believe that, of course, the personal income tax collection has also increased over the years. But if they cut down the slab rates a bit, I believe that in future, in next year or next to next year, the personal income tax collection will also increase. But of course, that was not expected in this budget, but maybe we see a change in the final budget. But as far as the data you have shared, I believe, of course, there's a increase in the collection, which is definitely on the right track. But to increase it further, I think they should consider cutting down the personal income tax rate a bit.
FY25 GST mop-up has now been pegged at 10.6 trillion rupees. How do you see this number?
See, as far as GST is concerned, because GST is an indirect tax, of course, there's a rise because, of course, the consumption has increased and people are actually going and buying goods and services, and of course, paying GST also. But in my opinion, I always consider the direct tax collection as a better benchmark, because I believe that that is the progressive tax, and GST, as per my personal opinion, I believe that the GST rates should be lower. Of course, collections should be higher because the consumption, the sale and purchase of goods and services should be higher. But the rates, I believe, are way too much in especially few sectors, so which are of course contributing majorly to the GST revenue. So I believe that the common businessman who is not operating at a very large scale is actually having a large burden of GST on their heads. So I believe that maybe the GST collection is really high, but I believe that the rates should be lower, and we should focus on more consumption rather than the higher rates.
Right. Let's get Amisha into the conversation and bring in the view on stock markets. Amisha ji, two very, very clear guidelines coming in from the budget. Housing, both for middle income as well as low income housing, 2 crore new houses to be built for the next 3 years, as also the huge amount of effort to be put in on the EV space and the solar expansion. What are the few stocks that you think would be benefited from these?
So I think some of the stocks which I may talk about, particularly in EV, we are not covering at the moment. So please keep this as a disclosure. But the EV bus segment, where there is a clear and large focus, Electra is one of the large players, and I think that's going to grow multifold even from here because they're expanded their capacity just recently. So I think that should do really, really well in the medium to long term also. Uh, of course, their focus continues to be not only in the sectors that you mentioned, but quite a lot on tourism. And as such, the hotel segment has been in an up move because of three reasons. Their occupancies have been growing, their rates have been growing, and above all, the food revenue is also growing. So we like that segment quite a lot. And we like within that the some of the listed plays pretty well. You mentioned about housing, and I think that housing can be played more easily by a cement and steel. Generally, we would have said some NBFC, but right now I'm still little looking at a time when the NBFCs, in terms of their borrowing, are at more ease because the system is slightly choked in terms of where to borrow. Railways continues to be an equally interesting segment. So these are some of the sectors I guess will continue to do very well.
Amisha ji, it's rare to have you on the show and rarer still to have your views post the budget. I think you should be generous and name 2 or 3 stocks that you are tracking in the hotel space, in the railway space, as also in the real estate space. ऐसे आपको नहीं जाने देंगे.
The hotel space may be our favorite and my favorite is Lemon Tree still. I think that is a very good chain and they are expanding in both the ways. Their own properties, but much more by way of branding the name and taking properties for management. So the capex intensity will continue to remain low. Of course, we cover Shail Hotel and even that is looking very good to us. So both these things in the mid segment is looking good to us. Railway, I think the stocks are under largely PSU category. There are some like Titagar who are into wagon space. Frankly, I don't have a very direct and straight study on these players, but I would say that equally good is SW Solar, where I'm shifting to the green side, which you said. And I like that stock also very well, with sitting on a very large order book. And in real estate, you very rightly said that the sector is doing very well. Large names, quite a few, are well covered, well owned. If I have to say some slightly differentiated names, then I would say 2 names where I see huge scope. One, which I had said long back, DB Reality, which is almost 10x. I think it is still scope to be 3 to 4x. And the new entrant, which is a bit in trouble. Most of these players have gone through trouble because of the 10-year long patch and the over leveraged balance sheet. But the second is Hubtown. I think both of these are sitting on large projects, commission, and as over the years the cash flows start, they will give very good returns to investors.
Okay. Let's also welcome Tridib Bhattacharya now, CIO Equities Edelweiss Mutual Funds with us. Tridib, good afternoon to you. Tell us, of course, one of the shortest speeches by Finance Minister this time around, 58 minutes in total. But did it have enough to fulfill your wish list as far as investors' wish list is also concerned?
Well, wish lists as they are can never be fully fulfilled, right? But I would say that the budget speech was short and sweet, high on sensibility, low on populism. And in that context, if you look at the path that she laid out, that the growth is likely to be infrastructure led, and at the same time we will maintain the fiscal prudence is a sensible way to go about it. And she also sort of let it out that in the she hopes to, I mean, they hope to get re-elected, and in the budget in July they will kind of lay out a path to the developed economy. So I think if you read the fine print, which is available so far, I think it's brief, it's sweet, it points to the right direction, and but I think heading into the budget, the investors or people who were expecting a bit of populist measures would actually stand to come back and say that they didn't play to the gallery given the elections. They talked about tourism and long-term goals, but not getting into the short. It is a fantastic news for long-term investors because I think that's how economy should be run.
Right.
But that's how I would summarize her budget speech and her intentions.
Right. Let's get Sudeep into the conversation. Mr. Bandyopadhyay, now that one major, how should I say, event is over as far as the markets are concerned, the interim budget is out of the way. Now, how do you see overall markets moving from here to the next padhav, which is the national election? Between now and let us say the first week of April, what are your expectations from the Nifty and of course the broader sentiment?
Well, Shailji, we have a positive bias and we maintain our positive bias. I think, in the very short term, markets have seen these two events. One is the US Fed and the other is the interim budget. Now that we are through with these, I think focus will shift back to corporate results till about 15th of February when the corporate results, by then all the corporate results will be out. So we will be, driven by corporate results to an extent. Of course, the geopolitical situation will continue to have an overbearing influence on global markets as well as Indian markets. But by and large, the macro story as well as generally the micro story for Indian companies is looking good. And we will continue to have a positive bias. There will be volatility, obviously, in an election kind of a scenario. There is always volatility. But this volatility is par for the course, and there is buying coming at every tips. Also, we must remember that the FII issue, as far as the disclosure and things like that, or the regulation which SEBI came up with, I think that also by and large has been handled. There are few residual issues which SEBI and those concerned FIIs are resolving, but by and large, I think that issue is over. The short-term FII having short-term outlook still continues to look at the valuation opportunity in China, but long-term and structural investors from global markets are bullish on India, and India is and will continue to attract a lot of foreign capital in the near future as well. Now, all this will keep Indian markets buoyant in the foreseeable future.
Okay, Gokul, before we let you go, one last question to you. Of course, the interim budget out, nothing on the direct and the indirect taxes front. But in the full budget this time around, will there be anything now? Should the common man really pin their hopes on the upcoming full budget from the government, especially when it comes to the new tax regime? The first time that it was introduced, the government had a huge failure. There were no recipients for the new tax regime. Last time around, when big changes were made, 7 slabs were introduced, tax rates were made attractive. We've come to know that reports suggesting 40 to 50%, and you can tell us your number, what you are getting from on the ground, have actually migrated to the new tax regime. What will happen in the full budget now?
So firstly, the finance minister started with a thank you to the taxpayers and acknowledged the growth in the taxpayer community and said that we need to win the trust of the taxpayers, and we'll do that by making sure that their money is well spent. So I think the important part is that they are trying to set an equation between the government, which is the tax gatherer, and the taxpayer, and that is based on trust, and the utilization of the money is a very critical part of it. I think in the budget that is going to likely to come up, they're going to provide a nudge to people moving to the simplified income tax regime. And that nudge could well be by way of improving the slabs at that point of time going forward. That's one part. The second part is the fact that when we look at this budget and we say there are no changes in the tax rates, including for, let's say, custom duties, but there's something that the finance minister said which was very important. They said the amount of time that is being taken for cargo clearances, whether it's at ports or at the airports, is being significantly brought down. Therefore, the compliance and reporting time, the compliance time and the logistics cost connected to cargo clearance is being brought down. She also spoke about something very specific. She said we are doing time studies to make sure that there is efficiency and productivity. So your rates may remain the same, but look at the effect on industry, specifically on a large number of people who actually engage in the entire movement of goods and services into this country, where you are actually bringing about greater efficiency and productivity. Because if instead of spending 3 weeks in a cargo, if your goods are out in 3 days, it's an enormous efficiency that you're creating in the system. So I think the rates are one thing, but I think productivity and efficiency in the compliance and reporting system is another piece, which I think this government is focusing upon, which is a very important piece of it.
Okay. I'm wondering if Amisha is with us now. I think Amisha has left. Let's get Trideep into the discussion. Trideep, when you're looking at the overall market at this point of time, we have record highs on many, many indices. Of course, the PSU, the railway and the defense basket have just run out of hands of normal retail investors. How do you see the fresh allocation of money coming in to Edelweiss Mutual Fund? Where do you think the maximum deployment will happen? Sectors or themes that you find attractive at current levels?
So, great question. And I forgot to kind of say that earlier. Thanks for inviting me to your show. I would say that basically we are, this is an election year in the true sense, in the sense that not just in India, but 50% of the top 20 global nations are going through the national elections. So it's going to be fairly noisy from various election promises being made and stuff like that. So the approach that we have taken at Edelweiss is to go the reverse of that, which is basically, rather than focusing on the noise of the macro, focus on those areas where we think earnings are likely to be resilient from a medium-term perspective. And the idea really here is that hopefully, kind of, if the macro turns out to be positive, these are the areas where you would see earnings upgrades. And if macro turns out to be not that positive or negative, then these are the areas where we would see less earnings downgrades. So with that, in that context, I think the 5 areas that we are kind of putting majority of our bets on are, first of all, the capex as a theme. We think this is a couple of years old, but as you have seen in the budget, and hopefully as the new government takes over, you will see continuation of the same. We think that's one area where earnings are likely to be resilient. The second area that I would point to is real estate. We think we are in the middle of a 5 to 7 year upcycle in real estate, and this is a very India-specific point, where after a decade of consolidation, reforms and whatnot, we are finally seeing the sector coming back in power. The third area I would point to is power. We think that we are getting into a power deficit kind of a situation as we head towards summer. I think various elements of power supply chain would actually see supernormal earnings over the next 2 to 3 years, and hence that's the third area that we are betting on. And finally, I would say I would put IT services as a dark horse of calendar year 24. We think that as global growth rates bottom out this year and improve next year, we think this is a good year to accumulate IT services over a period of time, and they would gradually see earnings come back, particularly as we head towards the second half of this year and heading into the next year. So those would be the final area. How can I end without mentioning lending financials? Particularly NBFCs, as rates go down, valuations at that part of the spectrum is still kind of robust. So those would be the areas that we are betting on. I would end by saying that with Nifty at about 21K, remember almost about 50% of the market has not participated, which includes financials, a couple of large weighted stocks, IT services, and pharma. So if any of these kick into gear, I think we have a few more legs to go forward than backwards. So I would stop here.
Let me bring in Amisha into the conversation. You did talk about the lending space in the end, and the PSU banks are roaring higher, 2.5% uptake. And Amisha, we do know how this whole space has been in the pink of its health in the last 1 year or so. It has surprised many, and even now, despite having run up so sharply, there is no stopping, there is no let up in the rally that we are looking at in the PSU banking space. Even in the budget speech, there was again an announcement of corporates of 1 lakh crores with 50-year interest-free loan for financing, refinancing, with focus on youth as well. How do you see the PSU banks really reaping the benefits of the announcements from the budget as far as refinancing of these loans is concerned?
So there are a couple of things weaved into your question. First is the huge run which PSU banks are seeing. And I think that huge run is also because they were at a very low valuations of somewhere around 0.4, 0.5 kind of their price to book. And as the books started cleaning up and the return ratios started coming in, we are now going to normal levels of price to book of 1.10 around. I don't think we are still in absolutely excessive range of price to book. As the provision coverage is coming down, profitability is increasing. The leg from here, whether it is loans for youth or largely, but which will make a difference to the lending system, is the health of MSME. And as the health of MSME is supported and they are growing because of different kind of capex being done in the system, real estate doing well, there is a multiplier impact which MSME feels, and which is where I think that the banking system will continue to do well. Current problem which some of the private banks are also facing in terms of their credit deposit ratio, I think for PSU is slightly less because of their huge reach and the fixed deposit that they can garner. So I still feel that the run in the PSU banks broadly will continue to be positive.
Right, Amisha. And we are now joined by Mr. Ashish Kumar Chauhan. He's the MD and Chief Executive Officer for the National Stock Exchange. He's in conversation with Tanya in Mumbai. Over to you, Tanya.
Mr. Chauhan, very, very good afternoon to you. Thank you so much for taking the time out for this discussion. Sakshi, this side. Please do help us understand what's your first take on the interim budget. It was just a 58-minute speech, but there was a lot of, statement which was pertaining to you. The gift city was mentioned, the IFSC was mentioned, the FDI flows was mentioned, first develop India. Such phrases were used by the Finance Minister. How do you really see and react to the speech that was made?
I think it's amongst the shortest speeches of budget ever made, at least in last 10 years. And in some ways, the three words that come to my mind are basically growth, welfareism, and fiscal constraint. So broadly speaking, the government seems to have found a winning formula, and the entire budget speech was over for last 10 years of the achievements rather than 1 year of achievement. And somewhere on the line, the growth, if you don't have welfareism, the growth can actually can come down. So that's where they've been able to create a social security framework by providing free food, free medicines, also free hospitalization, Ayushman Bharat, and pensions and insurance and all sorts of things, direct benefit transfer. So that's where they are kind of focusing to create a social security framework to make India a developed country. No developed country can be called unless they have a sort of a social security net for all its poor people. And that's where I think over the last 10 years, they have, without telling it a social security framework, they have actually built pretty much all the components of the social security. And of course, the fiscal restraint has been immense. Of course, it has been helped by the tax buoyancy in direct and indirect taxes, but you have to give them credit for not spending more than what is required, and you can see all their numbers, they seem to be spending less, achieving more taxes and things like that. And overall, I think somewhere naturally specifically for MSE, we are happy that IFSC and IFSC authority were given tremendous importance because what Hong Kong played the role of acting as a gateway to China over the last 40 years for its growth. I think the gift city can do the same for India over next 40 years. And that's where basically gift city needs to be given much more importance, and the IFSC authority needs to be given many more powers, and so that they are able to provide the same services, same instruments, same participants that are available in Hong Kong, Singapore, Dubai, or London. And that's where I think the movement is. And we must support that activity, because that's where we'll be able to raise literally trillions of dollars of funds for India's growth in terms of the municipal sort of infrastructure, and the state infrastructure, the central infrastructure, as well as for our companies to grow.
Namaste Ashish ji, and a very warm welcome to you on Business Today Television. The Finance Minister also talks about Panch Amrit goals, and among them for the financial sector, she talks about increasing size, increasing capacity, expanding the skill set, as also improving the regulatory environment as far as the overall growth of this booming sector is concerned. Of course, this was a vote of account, but in the next 3 odd months, 4 odd months, the actual budget will come here. Given that background in mind, what are the 4 or 5 things that you would expect for the broader financial sector from the Finance Minister?
My understanding is the way the vote on accounts was presented, and given the mindset as of now, broadly they want to give tremendous boost to the infrastructure. So whenever the new final budget is presented, it will have a lot more for the infrastructure going forward, and also getting more juice out of it in terms of creating more clusters so that you can scale up much faster. Also, in terms of the welfare part, they are going to, they have been able to target things using high technology, and that's what they want to take up. But more focus will be on housing, which was also mentioned, but literally 3 crore houses in poor areas have been provided, but 2 crore more houses over the next 5 years. So effectively, you can see that area also growing up. Middle income and poor people in cities also are now going to be targeted for making their houses or buying houses which are lower cost. So that is the kind of things for me, that one is the manufacturing side. How do we get more manufacturing to India by using PLI, whether on the high-tech side, which is all chips and other things, but also into a middle layer, that is making of iPhones, and then the lower end, which is more unskilled labor. And all 3 areas are I think, going to be targeted going forward. So the services part, which India has been doing exceedingly well, will have to be sort of promoted even in multilateral agencies and multilateral talks to ensure that India continues to do well there. But somewhere manufacturing has to come in. What I call green shoots are there, which are now pretty nicely growing up. Now we need to make a runway to start flying there too. And at the same time, create a skilling framework for people and reduce our total need for fossil fuel, which is largely imported by India. So that's where going towards alternative energy, which could be, of course, which is solar, but also nuclear power. So those are the things which I would expect as a strategy for the next budget.
Ashish ji, the other plus point is the 3 percentage point increase in infrastructural spending to more than 11 lakh crore rupees in particular, and the thrust on railways. How do you see this change?
In a way, the thrust is also on the indigenous part, that is Vande Bharat and other things, rather than importing technologies from abroad. And so that has been apparent over the last 10 years, that Atmanirbhar Bharat is what their slogan is, what the focus is. But the actual execution, it's not only a slogan, but the execution is happening, and that's where the Vande Bharat style trains, those metros and other things. That's basically, for me, the focus on railways is also because of the efficiency and the lower cost it brings, because there has been a criticism for India that the logistics cost is in high double digits, which needs to be brought down to low single digits. Already by many estimates, because of the way the infrastructure has been put up over the last 10 years, we have come down into the higher single digits, and that's a great achievement, but we have a long way to go to take the benefits of the development and also getting industries into the hinterland, and that's where I see a lot more infrastructure that is going to be built. But railway is going to be a key fulcrum on which some of the strategies will actually ride on.
Johan, also wanted to ask you, in the last 6-8 months odd, we've actually seen a very robust setup for the Indian markets. They've rallied to record high levels. We've seen new milestones for both the Sensex and the Nifty. The small caps have outperformed the markets, but this is all on the back of large participation from the domestic institutional investors. What do you think in this budget? Will the foreign institutional investors really see? Will this budget really appeal to them to pour in with greater vigor going forward from here into the Indian markets?
Somewhere on the line, the Indian tax regime was fast changing every year to year on variety of things, direct and indirect basis both. Now you can see the stability in indirect taxes using GST, which is now reasonably stable and doesn't do too much of sort of changing frequently. And similarly, in the direct taxes also, broadly the structure has now fallen in place, and that's where that was a major bugbear for the foreign investors, that the tax regime is slightly less understandable and less consistent. Now I think both these twin objectives have been met, and overall the foreigners also have an issue of or foreign institutional investors have an issue on the interest rates strengthening in US, Europe. You can see since yesterday the same issue because US and European markets, especially the interest rates decisions determine what kind of funds can actually go to emerging markets or other countries, and that's where somewhere if their interest rates start going down, then a lot more funds from abroad can be expected here. But if we have been able to create a framework for them to invest in more companies which are listed, in more areas which have opened up, and also into more physical, that is geographical areas that companies can set up their plants in because of the infrastructure that has improved. Overall, you will see a lot more of them coming from abroad. They were largely focused on China over the last 30-40 years. Now somewhere they are moving away from China, and that's where India, being a very large country in terms of the manpower as well as in terms of the technology savviness, as well as the GDP overall. So that's where you will see many more people from abroad, especially Japan, Europe, and US investing in India going forward.
Ashishji, the finance minister was hamstrung by the fact that this was a vote on account and only for the next 2.5 months. Therefore, policy changes were few and far between. Given that background in mind, is there something that you felt should have been mentioned in the budget but got missed?
No, I think in some ways it's easier for the finance ministers, outgoing finance ministers of so-called, to actually be very expansive on a vote on account kind of budget. But I think you can see their restraint in terms of saying this is what my fiscal deficit for this year is, but also for next year and next to next year. And so they have given the roadmap, and that's what is heartening, that somewhere they have not kind of gone beyond the remit of what this, and they've maintained the sanctity of vote on accounts, which is I've seen over many times where the outgoing government starts promising things which may not be possible. So in a way, this government has actually stayed within their limits, and that's a great thing. What, in a way, they missed out, at least in my opinion, because they had a very short time, and they didn't want to focus on last 3-4 years. but they focused on entire 10 years. But the way the government has been able to manage the COVID period for India has been phenomenal vis-a-vis rest of the world. Any other country, including our neighbors, Sri Lanka or Pakistan or Bangladesh, have faced some real difficult times, even Nepal, whereas we have been able to sort of help all of them in some ways, but also the rest of the world during COVID. And also in the process, we also created food security for every citizen of India. I think it has been a phenomenal last 4 years compared to what happened in the rest of the world. And that probably it was missed out, but probably they wanted to focus on 10 years of their achievements, and that's where probably this area has been missed out.
With that, Ashish ji, thank you so much for your time, and I leave you with a fantastic data point which I'm sure you will appreciate. Over the last 3 years, when we've seen the policies of the present government take deeper root, the Nifty is up by 48%. This is the best performing major index globally. It is twice more than what the Dow has given, which is 24%. I'm sure this is a number that resonates very well with the Managing Director of National Stock Exchange. Thank you so much for your time, sir.
Thank you.
Thank you.
With that, ladies and gentlemen, we draw to a close on this special coverage of the interim budget. Sakshi and I will be back sharp at 2 p.m. with the final 1.5 hour of market close on this fantastic Thursday.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe from multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines and many other sectors.